New horizon, connecting us with one purpose: to create and share opportunities to grow. Today, we are making a brighter tomorrow, built by our dreams and our energy. Across our continent, across the world, we are creating a better way to a better future. A Pan-African future. Together. Ecobank. A better way. A better.
Hello, good morning. And since we are on a platform that may be Pan-African, do I say good morning, good afternoon, good evening, depending on where any Africa entrepreneur who may have a business in Kenya or links in Kenya may be. Most welcome to our conversation today about tax. It is always said there are two things that are sure. One of them is taxes. The other we will not mention. Most welcome. So can we get to know who is in the room? Kindly use the chat section to introduce yourself. That is one way virtually that we get to know who is in the room. So I will begin with myself. My name is Njeri Lucy. I will be your host for this session. I lead the cluster on technical assistance in World International, and it is truly an honor and a privilege to be here with you at this moment. So can I get to know who is with me in the room? Kindly introduce yourself by putting your name, your organization in the chat box. As we give very few minutes to those who will be joining us, because taxes are about finance, and we know finance is about money, and money is time. So we've got to make the most out of this almost 1 or 1.5 hour session. Thank you. Keep them coming. We have Frank from Techno Creeks. Thank you very much. Japheth, where are you from? Wycliffe from Country Lodge, Kisumu. We have Helen from Discman Entertainment, Simeon from Moore University. I am seeing I have about 59, 60 people. Obed from Ecobank, Moses from Kinet Technology. Keep them coming. This is how you get to know who you will network with, who you will work with, who you will collaborate with. Because entrepreneurship is a very unique journey by now, you know. It can be very lonely because everybody else is flashing their monies or the company's monies wherever else they are. But for you at this time, you truly are having a headache. Where are salaries for your employees going to come from? Your suppliers are waiting for their money. Yes, this is a good conversation. Patrick from Symbion, Lily from AfriRed's Bookshop, yes, Japheth from Epsilon Business Services, Cindy from Zambrota Ventures, keep them coming, Benjamin from Farmers World, Nakuru. Let us know who's in the room. It is always said, you never know where your miracle may come from. Your opportunity could be 3 degrees of separation. Please make yourself known. We would like to recognize the presence of Ecobank here as our sponsors for this webinar. We have Wild International as well as Probity Consult and Sandbox International. Thank you very much for making this session happen. We have Joseph from CryptoTax. We have Fred from Mefric Financial.
Okay. Hi everyone. Let's give Njeri a minute. Sorry for that. As we all know, virtual sessions with some technical difficulties. Njeri, are you back?
Yes, I am. Thank you.
Okay.
And my sincere apologies for that. And that is my cue to get us going. I do not want to waste any more of your time. So I'd like to introduce the person who will be speaking on behalf of our sponsors, which is Ecobank. We have here Jackie Bitutu, the head of Women Banking, Ecobank Kenya, with over 20 years experience in telecommunication and financial services. Jackie has experience in women-led businesses, and when it comes to offering solutions to SMEs, she is no stranger, and therefore that is the reason why we are partnering with Ecobank. Jackie, over to you. Karibu sana.
Thank you. Good morning, good afternoon, everyone, depending on where you have connected from. You're very welcome to this webinar. I'm excited, really excited to be part of this webinar with all of you. And my name is Jackie Bitutu Wanyande. I'm responsible for women banking here at Ecobank. As you may know, Ecobank is a Pan-African bank. We are present in over 33 countries, and we focus on SME and women. We offer many other solutions, but in Africa, we are very passionate about SMEs. And since I sit on the desk for women banking, I'd like to also say that this program that we run is called Elevate. It's a unique program for women, and it's focused on women who are running businesses. The webinar today will focus both on all SMEs, whether they're run by women or not. My desire to speak about Elevate is just to introduce the program because we have some leadership training, tailor-made programs that we offer, and we do coaching and mentoring for SMEs. And so I thought that it's important that I mention this. And what's more is that we have a partnership with Africa Guarantee Bank that allows us to support SMEs and to create some very strong partnerships to ensure that they can grow. Anyway, today we are here to talk about taxes and areas that I find that as SMEs we miss out on key opportunities for growth and even for expansion due to challenges in complying with the tax regulations. Well, unfortunately, when we don't comply, we create some barriers that can actually stop us from taking our businesses to the next level or even accessing the much needed financial support from banks. So today we're here so that we can learn and seize these kind of opportunities when they come our way. And just to create some context, I've spent time with SMEs, more than 20 years. Please don't try to guess my age. And I can say with confidence that navigating tax issues is one of the most challenging aspects that they face. Well, in my years of dealing with SMEs, through my career in telecommunications and financial services, this is something that has always stood out. And it's not that the SMEs lack willingness. It's often due to lack of knowledge, hence platforms like the ones that we are running today. I've interacted with a number of entrepreneurs. They have like beautiful, brilliant vision and the right products, the right services, but that component of tax creates a huge blind spot in their business operations. This is mainly because, you know, SMEs always running around to get the sales, focusing on profitabilities, cash flows to make sure the business is running tomorrow, payroll. All these can overwhelm us until we don't remember to be compliant so that our businesses can be sustainable and go into the future. Let me share an example. I once worked with a small tech company in Hurlingham, and they had just landed a big contract from Uganda and Rwanda to offer de-risking services. So they were really excited about expanding across borders. And they at that point, they were recruiting additional software engineers and developers to work on this. But when we had the discussions about how they plan to handle their tax across borders, their reaction could just obviously tell that they're not been prepared beyond Kenya. So we had discussions and factored in VAT, the implications on exporting services. They would have actually been hit with serious penalties that would have even wiped out the profit that they had made out of that deal. But luckily, this was caught early enough. Another example is a close friend of mine who deals with leather handbags. And she does these executive handbags, really posh and cute. And due to the referrals from my existing customers, she was asked to take her handbags and gift items to 6 5-star hotels here in Kenya. And so she needed to buy a machine to just make sure that the finishing of these items she made are very uniform and cute. So the machine she was to buy was worth 2.9 million and from China. She makes money. One handbag is about 15,000 shillings. But when she made the application to the bank, her loan was rejected, mainly because her tax records were incomplete, her returns were not regular, but she hadn't even realized that all these tax elements were going to be affecting her creditworthiness. So in truth, sometimes submitting these returns on time can actually be a good thing for you when you plan to partner with an organization that wants to take you to bigger places, or even when you just want to get more money to grow your business. I personally have made a number of mistakes. In 2018, I set up an avocado farm, and we were aggressively growing. We put in so much money in that. We failed on 3 points, and that was a key learning. We have since become compliant, but the mix-up for me was I mixed my business expenses and my personal expenses. This made auditing very difficult. And in fact, it made me to miss out on some of the deductions that I could get on from a tax element as operating as a business. Even sifting through these personal and business transactions was a big problem for us. I also made a mistake in ignoring the VAT compliance thing. I thought we are so small, we just started. Why are we doing this VAT compliance thing? But our firm would have actually been caught off guard if we hadn't sought the help of a consultant. Even though before that we ended up paying a bit of penalties, and we didn't know when to pay the penalties because we overlooked some of the tax incentives that are given by government during some times when we should rush in and just fix any other issues that you've been having. One of the final things that was a challenge for us was record keeping. We didn't keep detailed. I know we kept records of who's coming to the farm, what they're doing, how much they should be paid. But like payroll issues, receipts, purchases, mainly purchases, I would buy things using my M-Pesa number and not take that back to the organization with the receipts. But the session today, and with the shared experiences I've given, you're going to see how we should run our businesses so that we are compliant into the future. Asante sana, and I trust that you're going to enjoy the session. Karibuni. Over to you, Njeri. Thank you. I can see the claps.
Thank you very much, Jackie, for entrepreneurs are made of grit.
Asante.
Super. It's good that you are getting the virtual claps. Thank you very much for sharing your experience, Jackie. And thank you that you're speaking to us from personal experience and what we are learning forward. So nothing about feeling out of place. So we appreciate that introduction. And now we invite Monica Gashusha from Wild International. Leading the cluster for bootcamps and training.
Sorry, Jerry, we are unable to hear you.
Am I audible now?
Yes, you're good to go.
Okay, all right, super. So I'd like to introduce Monica Gashusha, leading the cluster on bootcamps and training here at Wild International. I like the fact that Monica has been a lender previously, so she totally understands how to support you in that way now that she's on the side of being able to give strategic advice on how you would improve your businesses. A big welcome to you, Monica. Karibu sana.
All right. Thank you so much, Jerry, and thanks everyone for joining in. I can see 111 of us here. Karibuni sana. My name is Monica Gashusha. I'm a project manager at Wild. So who is Wild International? So Wild International is a consulting firm, and we work with the entrepreneurs to support them in their business. So how do we do this? We work with entrepreneurs from different value chain industries and at different levels. We support entrepreneurs who are starting, we support entrepreneurs who are growing, and we support entrepreneurs who are excelling in the global space. So our work is just to help you lay a foundation for your business. And this is where we sit down with you and refine your business model, because we believe that a business model is the foundation of every successful business. So we help you craft your strategy for growth, your strategy for expansion, your strategy for people in all different aspects that we believe your business can grow. We work very closely with the Sandbox. We call it the village expert. This is whereby we have different experts for different business discipline. And how we support is that once we onboard, we run different programs. So once we find out that an entrepreneur needs specific support, say, for example, in human management, in legal, we have a legal expert, we have a HR expert, we have a process expert, just to be able to sit down with you and be able to refine your processes, refine your people management, refine your financials, and you are the expert who lay the foundation by refining your business model through strategy development, and we also support you in execution. We work also very closely with mentors and coaches. So once you go through the program, we will assign you a coach and a mentor who is able to sit with you just to be able to support you. Sometimes, like Lucy said, entrepreneurship can be a very lonely journey. And sometimes you need that coach, that mentor, who just calls you and find out, how are you doing today? How is your business? What are your plans? How are you progressing? What are the trends in the market? Just to keep you on toes and be able to support you in business. And we recognize that every entrepreneur is looking for funding at one point or another. You're looking for a partner who is going to support you to fund your business in different aspects. And that's why we partner with financial institutions, this time Ecobank, to be able to support you. Are you looking for finances to scale up your business? We have an able partner right here with us to be able to support us when you're looking for finances to grow your business, to even trade within Africa. It's a Pan-African bank. You want to do business across borders, they can support you with cross-border compliance, close borders trade, just to be able to support you to expand and grow your business. So I am so happy this morning to be part of this conversation. Like Jackie has said, tax issues can be very tricky. And it is our responsibility to continue informing you, to continue encouraging you that tax is not a bad thing. being a tax compliant will actually elevate you to the levels that you're looking for investors to invest in your business, for lenders to see that indeed you're compliant, and therefore they can be able to give you a hand to support your business. And I normally say that the best thing entrepreneurs can do for themselves is to seek knowledge. Okay, we say knowledge is power. So I'm very happy to see all of us here to be able to invest our time, to be able to get insights and knowledge that is going to support our business to move to the next level. So this is very good. This is a great investment for you, and you should give yourself a pat at the back and say, you will not get out of this session empty, but the knowledge that you will carry from today will move you to the next level. So carry support you in case of any support that you need, be it consulting, be it coaching, be it mentorship. We are always here to support you as an institution and as partners. Thank you so much, and you're most welcome. Enjoy your session and get the best out of it. Thank you so much. Back to Lucy.
Super, super, super. Thank you. Thank you very much, Monica. I like to use is it the tagline for a certain football team? You never walk alone. We shall not talk about Premier League results here, but that is it. That is who Wild is about. Now, to the real reason that brought us here, because for us entrepreneurs, time is a very important component. So we already said you can begin to ask your questions here in the Q&A section. So let me begin by asking, do you know what is tax avoidance and how it can propel your business growth? Then what is the implication of tax evasion? Much as we seem to joke about it, what does that mean for the business? And then what happens when you do not know anything about tax? It is said legally, ignorance is no defense. And that is why you're here, and we truly appreciate your time for being here. Now, to take us through that conversation is Thomas Warira, who is the co-founder and principal partner at Probity Consult. They offer accountancy solutions. They help you by you being able to outsource your accounting services. And the fact that they are a member of Sandbox is the fact that they have also been SMEs. That is to say, they truly have entrepreneurial empathy. They totally understand you. There is no pressure about trying to put a full-fledged accounting department, and you do not have the finances for that. Let me not take the wind from his presentation. Karibu sana, Thomas.
Thank you very, very much, Lucy. Much appreciated. Thank you for the opportunity to come in here and just share of this moment with everyone. So we are going to be looking at common tax mistakes that we should be avoiding. And we also need to ensure that we look at, we understand what these taxes are. We understand what the different taxes that we go through as businesses are and that. So I will begin with just a basic foundation of who we are. Probity Consult is a Kenyan-owned and managed consultancy. And our prime offering of services is to SMEs, though we also serve NGOs and corporate organizations. And we work on being partners with our clients, assisting them in achieving their goals as a business, what they want to achieve. So we've been in operation since 2013. So for the last 11 years, we have actually been partnering with NGOs, offering outsourced accounting services, accounting automation, financial management services, payroll, automation and administration, and statutory tax compliance, budgeting, forecasting, amongst some of the other things that we do. Again, like Monica and Lucy have mentioned about the Sandbox, the village experts, we are part of the Sandbox, and we are the accounting and financial management experts at the Sandbox. And that is what we have partnered there to do. So Our journey today will walk us through some of the things we'll walk through is common taxes that Kenyan SMEs actually are exposed to and obligated towards. We will look at what are the key dates for taxes for Kenyan SMEs. We will look at what are those common mistakes that Kenyan SMEs actually make when they handle or deal with taxes. And a lot of this is based on experience that we have had over the years that we have worked with, seen this with different clientele that has come to us to work with, and we still get to see this in different fora a lot of time. Then we get to see how to avoid these common mistakes. It will be futile if we understand what the mistakes are, but then we do not then get to know how to go around them. And then we will share tips on how your business can stay tax compliant up in this ever-changing environment of legislation. So let's look at what are some of those common taxes for Kenyan SMEs. So our taxes are clustered into different categories. And the first is basically what are our direct income taxes. And under income taxes, we have corporation tax, which is what is levied on the profits of companies. Now, corporation tax is loosely also just called income tax, though income tax is really a family name of the taxes that businesses would pay. So we have corporation tax, we have turnover tax, and we have SMEs that actually have opted to pay turnover tax. And the way turnover tax works is that instead of working out what is the profit that a company or a business generates over a period of time and calculating the tax based on the tax rate on that, turnover tax is basically a tax that just levies 1.5% on the revenue or the sales of a business. It is a much simpler option of going around it. However, it is important to establish whether it is the best option for your business. Then we have withholding tax, and this is actually a tax that is deducted at source or upon payment for services that cover professional consulting, management type of services in there. Then we have advanced tax, and advanced tax is levied or especially on commercial vehicles. This is actually paid at the beginning of a year. So usually in the month of January, that is when people who operate commercial vehicles, as they're renewing their insurances, they're renewing their TLB licenses, they're expected to actually pay advance tax, which again is levied on the basis of, for a passenger carrying vehicle, it is on the basis, it's levied on the basis of carrying capacity, and for goods carrying vehicles, it is on the basis of tonnage capacity. Then we have the rental income tax. And this touches both on businesses and touches a lot also on individuals. But this is basically rent tax that is levied on the rent that is collected from residential properties. So if you have your business has residential income, then it will be subjected to rental income tax at the rate of 7.5% of the gross tax that is collected on a monthly basis. Now, this rental tax obligation would fall on a business if the rent they're collecting on residential property is within the range of, is above 24,000 shillings a month and is less than 10 million shillings in a year. So the moment it exceeds 10 million shillings in a year, then the corporation tax setting comes in, and the rent, proper accounts need to be maintained to be able to establish then what is a profit on the business, and it's levied, the tax is levied on that. Then we have capital gains tax. And capital gain tax is, as the word implies, is a tax that is levied on profit that is actually made when you sell property. So when you end up selling a plot or a building, some real estate, and there's a gain on it, there's a profit that is made on that, then capital gains is levied at a rate of 15% of that gain. It is a final tax on the transaction, and therefore, once capital tax gain is paid on a transaction like that by the business, then that that profit will not be taxed again at any other point. And then we have pay as you earn, which really is not a tax on the business, is a tax that is levied on the employees of a business. However, the business is the agent of collection of this tax. Therefore, as an employer or as a business owner, then you're obligated to register for the obligation and calculate and deduct pay as you earn from your employees on a monthly basis, then remit that to the tax authority. So that basically the business is an agent of government to collect pay as you earn from its employees. Other taxes that actually do not fall under the income taxes family is value-added tax. And value-added tax, we get to see this. This is actually a tax that is levied on sales. And when a business is operating and dealing with taxable goods or taxable services, as long as their revenues or sales in a year hits the 5 million shilling threshold or is above that, then they're expected to register for VAT and charge that at a rate of 16% on the goods. Now, VAT works in two ways, in that the business will charge its customers VAT on goods and services that it sells. But on the other hand, it will also pay VAT on all its inputs, whatever it purchases, and therefore the VAT remitted to the government is a net of the two, and that is easily worked out for you by your accountant and then remitted a due date. And then we have excise duty. And excise is a tax which historically began as what we call a sin tax. It was a tax that was levied on goods that were considered harmful, or the government just wanted to either discourage consumption, or luxury goods from which then government wanted to collect tax from those who had additional or excess monies that they could spend on these luxury goods. So originally, the origins of excise duty was a sin tax, basically. However, this has changed over time and is no longer just on those kind of commodities and goods, but we have seen excise now get into many other things, including manufacturing. So we have excise duty that is charged in manufacturing, and not only on those goods that originally we would have considered harmful goods or luxurious goods, but on basic commodities now, like bottled water. So we have excise duty that is charged on bottled water, bottled juices, and such kind of products. And then we also have import duties that actually are charged and paid at the point of importing goods. So when you import something into the country and it lands at the port, part of the clearing process involves then paying importation duty on the goods and the services. And then just to mention here, one of the things that I get asked a lot about is is there duty? Do we pay any taxes when we export our goods? Now, Kenya currently does not charge any taxes on exports of goods. And this is just to help make our goods that are exported out of Kenya competitive. So, and this is in line with a lot of practice of countries around the world, trying to make their exports competitive. So if you export goods out of Kenya, then there will be actually no taxes that will be levied on those exports. VAT include everything, including VAT. VAT actually on exports is at usually 0%. So technically there is no additional tax charge on exports that are made by businesses that would manufacture and then send goods out of the country for sale purposes. It's important also then that we look at some of the key dates, because when we go into the common mistakes that are made, again, this will come into play. So for the taxes we have talked about, what are those key dates that you need to pay this on? So for income tax or corporation tax, which is the taxation that is levied on a business's profits at the close of a year. For most businesses, what we see is that they wait for the year to close. And once the year has ended, they get their books completed. Some may get them audited, and then they will calculate and establish how much tax is payable, and they'll seek to pay it then. However, the law requires that this tax is estimated on a quarterly basis and also paid on a quarterly basis in the course of the year. So for corporation tax, you need to work it out and pay 25% of the tax due on the fourth month of the year. So for example, if your year end is December, then in April, there's expected to pay 25%. In June, another 25%. In September, another 25%. And in December, another 25%. So that when the year closes, once your audit is done, all you'll be paying is any balance of tax that is due. So that is how corporation tax works. It's collected on an installment tax basis. For a long time, KRA has not enforced this for smaller businesses, but we've been seeing a lot of this enforcement now coming into place, where they are doing emails, they're sending emails, and they're making calls, just asking and reminding that installment taxes are paid. Turnover tax is due by the 20th day of the following month. So if your business is under the regime of turnover tax, then you collate all your sales for the month, and then you file in the turnover tax return and make the payment by the 20th day of the following month. Withholding tax is also due by the 20th day of the following month. So all withholding tax that is collected within the month is paid out deducted and collected within the month. You need to pay it out by the 20th day of the following month. We had seen some changes come in this in the Finance Act that was then set aside by the courts, which had changed this to be paid within 5 days of making payment to the payee. However, we've seen KRA now reverting back to the 20th day of the following month. Advance tax, this is the tax we talked about that is paid by transport operators. This is payable by the 20th day of January every year for all your commercial vehicles that fall under the advance tax regime. Rental income tax is due by the 20th day of the following month. So if you own and run residential properties that you generate rent from, then you need to collect that and make a return by the 20th day of the following month, and also the payment is due by then. Now, you'll notice we are saying due by. It doesn't mean that you necessarily file the return on that day, but it is any time before or by that day. Capital gains tax. This one is actually an interesting one because it does not have a specified date, because these transactions, the way they happen, there's a number of things that govern when the tax is payable. But the Income Tax Act actually requires that capital gains tax is paid at the earlier of receipt of the full purchase by the seller of the property, or the registration of the transfer of the asset in favor of the purchaser. So whichever comes earlier points out the point at which capital gains tax needs to be paid. And it's important to note that This has now been linked in a way. So if the seller does not pay the capital gains tax, then the purchaser may not be able then to pay their stamp duty on the property, and therefore may not be able to have the transfer effected in their favor. So this is some of the things that government is now doing to ensure, to enforce the payment of these taxes. The pay as you earn, which is deducted from salaries of employees, is due by the 9th day of the following month. Now, this is one where we get to see a lot of people missing the date, and partly is because a lot of dates that are for taxes that are due monthly are on the 20th day, but pay is unique, is on the 9th day of the following month. So this you need to be just cognizant of and wary about. Value-added tax is due by the 20th day of the following month. So if your business is registered for value-added tax obligation, then it is imperative that by the 20th day of every subsequent month, you ensure that the return has been filed. Excise duty, the one that's paid on imported goods, this we loosely also call it import duty. That is paid upon clearance of imported goods. However, we have excise duty on manufacture, and again, that is also paid on a monthly basis on the basis of the manufacture or the production that actually happened in the previous month. So it's important that then we note these dates, because this is one of the things that aids us in being tax compliant. So let's take a further step and look at now what are these common mistakes that we see that are made by Kenyan SMEs in this tax arena. So the first thing we see is a lack of understanding of obligations for a business. Every business has a tax obligation. And we find that many business people do not even know where to go and look and establish what are their tax obligations. So the first point of call, the first place you can look to establish what are the tax obligations for my business is on your PIN certificate. When you look at the PIN certificate of the business or even your individual PIN, at the bottom of it, the last item on it is actually the tax obligations that you have been registered for. So that would be a very good place to start, to go and establish what are those obligations that my business is registered for, and therefore I have to file returns. And then once you know these obligations, then you need to know how frequently should we then file returns. There are those that require a monthly return. There are those that require an annual return. So you need to be able to ensure that those are filed. There are some that require a return regardless of whether there was tax collected or not. An instance would be VAT. For some businesses that may not have some data, for businesses that are VAT registered, in those months where you may not have any sales, you still need to file the VAT return. You still need to file that return as a nil return. For businesses that say have been dormant and have not operated for a period, the income tax return still needs to be filed. So you need to file a nil return at the end of the period. So it is important to understand what your obligations are and ensure that the returns, the relevant returns, have been filed on that date. So another thing we find is not filing of tax returns, and this is across all taxes. And this comes in for many, many reasons. One is what we were talking about, a lack of understanding. So some businesses or some business people may not understand they have a certain obligation, and therefore they don't file tax returns on them. There are other situations where we've come across where people are just not prepared to file. The business owner feels because there's no money to pay the tax, then we will actually not file the tax return for that obligation for the specific period. Now, whether the cash is available to pay, we need to be able to separate between filing the return and making the payment on the return, and ensure that then we file all our returns along the way, because for lack of filing a return generates a penalty. If you fail to file a VAT return, that automatically generates a penalty of 20,000 shillings a month. If you fail to file in any other return, it also comes in with its own penalty just for not meeting the deadline date for the filing. And then you will actually then be penalized on interest on the tax that was payable that has not yet been paid. So another key mistake we see is misreporting income or expenses. And this comes from either not having proper accounting records to support your tax returns that are prepared and that are done, or sometimes it's very intentional, where an entrepreneur or business person feels they look at their tax return, they look at their sales for the month, they look at what needs to be paid, and they feel, no, this is too much. I should not be paying this kind of money. And therefore, they choose either to misreport income or misreport expenses. They can understate income or overstate expenses. Those are some of the common mistakes that we get to see when that is done intentionally. However, other times it's just inadvertently because the records were not done properly. They've not been kept in an accurate and complete manner, and therefore the tax return that is filed ends up with misreporting of income and expenses. And then not declaring all sales in value-added tax returns. Now, for those businesses that deal with value-added tax, VAT, some of them we have seen only go in to put in any sales that they have made that actually attracted VAT, where they charged VAT. However, the return has provision for all types of sales, whether the sales had VAT or they did not have VAT. There are actually tabs to actually record that. So the VAT return is a holistic, complete return where you need to declare all sales of the business, regardless of whether they had VAT or not, and even those that have VAT at a different rate. For instance, if you deal with petroleum products where the VAT is 8% rather than 16%. So we've seen a lot of businesses filing VAT returns, and they do it on time and religiously, but they're inaccurate because they leave out certain sales. And as we'll see down the road, that then leads to another problem. Not keeping adequate records. And these are records both of the business and the records that actually will support these returns that you do. It is not enough just to do a tax return and file it. You must always have whatever the supporting details for that tax return is, because you never know. One day you may need to support it. KRA could choose to audit, and we've seen this happening. And then when they pull out the returns that businesses have filed, the businesses then are not able to go back and support what went into that because they have not kept adequate records. So they filed a return for the purposes of checking the box of meeting the deadline, but it was not factual. So it is important that adequate records for tax purposes are kept. Then this is another large one where we've seen a lot of businesses overlooking deductions and incentives that are given. And some of the incentives that are given to businesses include things like wear and tear of the assets that they use in a business. So when a business has assets, for instance, a motor vehicle, or you're using computers, you have furniture that you use in the offices, you have equipment for production in the factory, all those assets, the government, the Income Tax Act actually gives you some incentives. So it will give you an incentive called wear and tear, where you would be able to actually estimate how much the utilization or the use of the assets are, and there is actually formulas for calculating that. And then these additional expenses of wear and tear are brought into your calculations or into your records so that they reduce the profit that the business is declaring for tax purposes. So when you overlook this, either because you're not aware of them, you do not know how to calculate them, or they're just done incorrectly, then we've seen businesses now declaring higher tax than they should be paying. And yet there's incentive that government has given where they could actually reduce some of the tax they're paying. So it is important to understand the incentives that are there for your business, and especially where there's investments of different types that have gone into the business from an asset perspective, to establish from an expert these assets we have in the business. What incentives do we have around any of them, and ensure that then you take advantage of those. For those who deal with services, and not necessarily selling services only, but even for any business that pays for services, this is, you can pay for, like, for example, when you pay for legal fees, you pay for a management consultant, any kind of those professional or consultancy services that you pay for, they attract withholding tax. So we have seen a lot of businesses that do not deduct and remit withholding tax. Now here, this is one because of not understanding, a lack of understanding of the requirement of that. And interestingly, this is one of the obligations that will not appear on your PIN certificate, because this falls on every individual and every business. This is automatic on everyone. So it is expected either as an individual or as a business, if you pay for professional service, consultancy services, management fees, then you deduct withholding tax at 5% if the provider of the service is a resident, or loosely is a Kenyan organization or a Kenyan individual. But where they are foreign individuals, then you deduct at 20% and remit that to government. This is one of the places where we've seen a lot of small businesses failing and having a hard time with KRA when they are audited. Because KRA will come and look at all the payments you've made over a period of time, and you should have deducted that, and then they will expect you to then remit that tax to them. So it's important then to understand which services that you're dealing with or you're paying for that attract withholding tax, so that you're able to deduct it and remit it. And what to note is that this is not a tax to the business if you're the one consuming the service, because you pay your service provider 95% and remit the 5% to government. And where you are the provider of the service, your customer will pay you 95% of your invoice value and remit 5% to KRA, and that becomes the tax paid in advance, basically, which when you calculate your corporation tax, then you will deduct that withholding tax. So it is basically just tax paid in advance and not an expense to the business. Then inconsistencies in returns, and this is a big thing because this is one of the areas now KRA is looking at. It's become a nice area for them to raise revenue from businesses. And when we talk of inconsistencies, what I mean is that as a business, you need to look at all the returns that you're filing together. Yes, they are filed at different points in time, but you need to ensure that they speak the same thing. They contain the same numbers. So I'll give you an example. If you have a business that is dealing with, you have employees, and therefore you are deducting pay as you earn on a monthly basis. And then on your sales, you are charging your customers VAT, and you're remitting that on a monthly basis. Then at the end of the year, you're filing your income tax return once your audit has been done. Now, one of the things that KRA looks at nowadays is they pick your income tax return and compare the sales or the revenue you're declaring in it with the sales and the revenues that you declared in your VAT return. Now, if those two do not tally, then you have a problem. and they will come basically to audit you because of an inconsistency. The same income tax return, they also look at what you've declared as salaries and wages that have been paid out to staff. And if they do not tie to what you had filed on a monthly basis in the pay-as-you-earn return, then it generates an inconsistency. And that then could make you a candidate for audit by KRA. So it is important that then all returns that are done are looked at in totality. So what you do on a monthly basis, you need to remember that that is adding up on what will be your final return at the end of the financial year as an income tax return. So these are a lot of what we are seeing as the different, as the common problems that have come in. Now, one other problem we also find a lot is handling of audits. When KRA decides they want to come and have a deeper look at your records, they want to come and peruse your records, they want to audit you. And we've seen businesses that go into those audits without seeking expert assistance. Now, it is key, it is important because they will audit you on the basis of the acts, depending on what tax they're auditing. If it's VAT, the VAT Act. If it's income tax, the Income Tax Act. It is good for you to then have a very good understanding of what the provisions of the act are, so that based on whatever findings they have, then you know how to argue your case out and what to handle and all that. Because one of the things you need to note is that where KRA comes in and they make any errors and they collect additional tax, then the law stands on their side. Now, if you cannot identify that and then seek to either have that treated as an advanced tax payment or something else, then those overpayments on your part end up just being losses for you as a tax that you've just paid because you did not understand. But it is important that when KRA choose to audit you, and they do this on various bases, how they pick out who they want to audit, it is important that you get a tax expert, an accountant with good understanding of taxation to actually help you and assist you handle that process. Okay, let's move to something else and we see how we can avoid these common mistakes that we've talked about that are made by Kenyan businesses around tax. So the first thing is just understand your business registration and the associated tax obligations. Now, different types of registrations will require different types of taxes to be paid. For instance, if you run a business as a sole proprietor, probably you have registered a business name. Now, that business name does not have a liability for tax. The tax liability falls squarely on the PIN under which that business has been registered, which is your individual PIN. So you, as the individual running the sole proprietorship, will be liable, and you will be liable to income tax. However, depending on the type of business you're running, on the revenues you're running, you could be registered for VAT, and therefore there will be a VAT obligation on your own individual, on your PIN as an individual. There'll be a pay obligation if you have employees on that PIN. So if you're running a business as a sole proprietor, then you need to understand that income tax is due and will fall due on you. Withholding taxes, again, will be paid under your personal PIN. Now, if on the other hand, you have registered a company limited by liability, then it will have its own PIN and its obligations will be income tax and any of those other taxes on the basis of whether they've been registered for or not, like VAT and pay-as-you-earn, and withholding tax falls automatically. So it is important that you check your PIN or you ask your accountant or tax consultant to just basically help you understand, based on your tax, on your business registration model, what are the associated tax obligations. Then next is keep proper books of account that represent your business well. Now, when we talk about proper books of account, it's not just listing income and expenses. which is what we have seen some businesses do. Now, that is a start, and that is good. But books of account go beyond money that comes in and money that goes out. Now, proper books from an accounting perspective are kept on an accrual basis. And what I mean by that is that you record income and expenses when it is incurred and not necessarily when payments happen. For instance, when you make a sale, you record that sale, whether it is a cash sale or it's a credit sale. From a tax perspective, it is a sale as long as an invoice has been issued for it. And then when you incur an expense, whether or not it has been paid for, then it forms an expense for purposes of tax. So books must be kept on an accrual basis. They must be accurate and they must be complete. It is important then also to engage the services of a qualified accountant or a tax practitioner to help you with this. And some of the ways you can go about making this for businesses, because some business owners look at it and they say, we can't afford to have an accountant in place. We can't afford. You don't need then to have a full-time person. You can actually outsource the service and then have somebody coming in periodically, somebody qualified who will be able to come in periodically, look at the transactions you've run over the period of time, and then advise you and help you then make proper, accurate returns and even keep proper accounting records in that. So one of my other recommendations here is that for your business also, it's a good practice to have your taxes reviewed on a quarterly basis by an expert. So once the quarter is over, invite an expert over to come in and look at what you've done over the quarter. And just then look at things and then advise you from a technical perspective of the accuracy, of the completeness of those tax returns, so that if there are any errors they pick up, then you pick them up early, you address them before you have then issues with KRA down the road. One of the next thing is plan cash flow adequately to meet tax obligations. So make your necessary arrangements in time. Now, this is not just about trying to bridge financing to pay these taxes when you need to, but budgeting and forecasting. Just planning adequately to forecasting, looking at your budget and saying, these are the sales we anticipate, these are the expenditure, and therefore this is the tax we expect to pay this month. This is the VAT we should be expecting to pay, and the pay as you earn. And so you start planning for that cash flow early enough. Today is 25th of the month. And this is when a lot of business people, a lot of entrepreneurs now are running around trying to figure out how salaries will be paid and the resultant taxes that will then fall soon thereafter and that kind of a thing. So planning, budgeting, and forecasting helps you this. And then where you actually identify there will be a gap, then you can speak to your bankers early enough and they'll help you come up with a solution of how you bridge that financial gap to be able to pay the taxes on time. Then also incorporate the use of software for some of these taxes. And this especially taxes that keep running on an ongoing basis, like pay as you earn. For many organizations, their payroll numbers do not shift from month to month. They are consistent over periods of time. And therefore, we have a lot of softwares that are available that you can either invest in or you can just subscribe to, and you pay as you go for these softwares. They are crafted well. All you need to do is put in people's names, employees' names, and how much you're paying them, and then it does the rest for you, and even generates for you the reports that you need either to file your payee and to do the different things. So leverage on technology and use tax software. Then keep a checklist of your tax obligations and the due dates as a regular review tool for management. So every management meeting that is had, this is one of the things that I would encourage that you keep as a business. Have a checklist with all your obligations, what are their due dates, and keep checking those boxes to actually ensure that these have been done and they're done on time. These reminders work very well and will keep you safe from having to then deal with crisis because of dates that then may have gotten missed. So those are some tips on how those are some of the ways in which you can avoid some of these common mistakes that are made by just employing some of these different things. And then I also want to give you some tips on how you can remain or stay tax compliant. So what we've covered earlier will help you get tax compliant. And how can you then stay tax compliant? If you're already in the place where you can say, my business, yes, we've been filing our tax returns, we've been doing everything, we think we are good and all that, how do you remain there? Because that is a key thing, the staying power. So one of the things, and we've talked about this, is keeping proper books of account that track all business transactions. So ensure that all business transactions are captured, not just what is cash in and cash out, but every business transaction, including those expenses that are incurred and have not yet been paid for, and those that are not of a cash basis, like depreciation or wear and tear. You need to actually account for those. Then file accurate tax returns on time and all the time. So separate between filing a return and payment. Let those be two different things. So file the return, whether cash to pay for the tax is there or not, file the return. Avoid the penalty. Keep a good record with the Revenue Authority on filing. And then payment then follows. Set reminders for key dates or work with an accountant who comes in periodically and handles that for you, all those taxes, to ensure that this happens. So you can leverage on basic technology that we use for reminders. Then we had this at the very beginning in the intro, separating business and personal finances. This is a key one. You need to have a business bank account and then a personal bank account. Ensure that monies are kept separate, so that even when it comes now to doing your tax returns, to doing reconciliations, to establishing how your business is performing, then these are separate. Any day that KRA want to audit you or review you, it is then easy to just hand them and give them the records that relate to the business and not your personal records in that. So ensure you separate between personal and business finances. Then use templates to calculate your taxes. And we accountants are good at making this, and we can tailor this for your business. Have your accountant tailor this for your business so that you have different templates that work and help you with different kinds of taxes, where you can plot in your numbers for sales and then they calculate different things for you, and you can use this as trackers to actually see where you're going. Then engage your financial partner or your banker to just ensure that any cash flow gaps are bridged. Don't wait for the 20th day when you're filing your VAT and then you discover the money is not there. Start earlier. Establish this earlier and have those conversations so that then they step in and they help you be compliant in as far as your payments are concerned. Then engage a tax accountant to review your taxes periodically. You can do this quarterly, you can do this half yearly, or even at the close of the year if you really have to do it then, just before your final filing happens, where all your taxes that you've handled in a period are reviewed and just checked, so that then you can sit back comfortable and know if KRA decided to audit me for this period, we are good with them and they can go ahead and they do that. And then keep abreast with changing legislation and what is happening. And your accountant is your friend as far as this is concerned, your tax consultant, your financial partner, like what we are doing now is bringing you this kind of update and everything. And then even the KRA website is a place where you can go in and be able to actually then pick up some of these. So those are some tips that will help you keep abreast with the changing tax legislation and ensure that then you can remain and stay tax compliant for your business. At this point, I'd want to hand back to Lucy, and Lucy will then take us through. I bet there's a lot of questions, Lucy, and we can then talk about those.
Great. Thank you. Thank you very much, Thomas. Yes, iyo makofi iende. We truly, truly appreciate you, Thomas, for removing ignorance from us. And of course, also giving us the work that we have to also study what are those taxes that specifically directly affect our businesses. Yes, yes, yes. Let's truly, truly appreciate. Sasa, here comes the questions. What I will do, I'll try and collate them. You take 3 at a go, so that we see whether we can finish here by about what? By about, well, we were to finish at 12:20, give or take 12:30. So the first question, Thomas, would it be advisable to register for VAT despite being under the threshold of 5M turnover? And then the other question is, does housing levy fall under income taxes? Those are like 2 separate questions. And maybe closer to the first one is, who qualifies for TOT, turnover tax? Wow, this is a case study here. So the next one is, in case I'm a supplier of chicken feeds, but I buy them from a distributor and make some small profit as I sell to clients. Now, how am I supposed to calculate 16% VAT? In my receipt from the distributor, there is already a deduction of 16% VAT. Am I supposed to pay VAT? Kindly help. I think let's take those ones first, Thomas.
Thank you very much. I'll start with the first one about should somebody register, should a business register for VAT if their revenue is still under the 5 million threshold? Now, yes, you may, and that is called voluntary registration. You could actually do that, and you have to actually do the analysis of what is the benefit of that. Now, we've come across businesses that want to deal with certain organizations, larger organizations, and these organizations insist that whichever business is dealing with them must be VAT registered. Now, if you have a client like that and you want to deal with them, then you could go ahead and then get registered for VAT. It is called voluntary registration. So do the analysis and determine whether it is necessary for your business to be registered at that level. Housing levy, is this a tax and all that? Now, the housing levy is actually, as the name puts it, it's a levy. So it's not a tax per se. And this is actually, the cost goes, the burden is borne both by the employee and the employer, because the employee is deducted an amount and the employer then matches that amount. So the burden is both on the employee and the employer. It is basically a levy that is levied on employees who are earning a salary, and therefore it technically does not fall under the tax category, but is a levy or a deduction that is done on that. Turnover tax, who is eligible for turnover tax? Now, if your business has an annual revenue of between 1 million shillings to 25 million shillings, then your business can be eligible to turnover tax. However, if you choose to go the turnover tax way, then you have to apply to the Commissioner of Income Tax to then get you out of the regime of the normal income tax, where you calculate tax on profit of the business and put you in a turnover tax regime. Now, one of the things I want to mention here is that it is a simple tax to calculate, because all you need to do is get your total sales for the month and then calculate 1.5% of that and remit. However, it may not give you a lower tax point than the normal type, because it does not consider the expenses that you're going through. So you can imagine in the months where your net profit is actually less than that 1.5% of your sales, what happens in months like that. So you need to do the cost benefit analysis, have your accountant help you basically do that and help you establish whether turnover tax is the best regime for you. Thank you. The other one is about VAT. Should I levy VAT and yet when I see in my purchases there's VAT. Yes, VAT actually operates in a manner where whatever you sell, you need to calculate to add 16% VAT. However, before you remit that VAT to the Commissioner of Income of Tax, you need then to deduct the VAT that you paid when you purchased. So for this person who asked this question where they're buying chicken feed, when they sell this chicken feed, they would actually charge VAT to their customer, and then they would deduct from that VAT, they would deduct the VAT they paid when they bought this chicken feed, and the difference is what they would remit to the tax authority. So basically, the amount of VAT they are remitting is only on the value they have added on that product, which is ideally for them who are not manufacturing or producing. It's the profit on the, they'll only be paying the VAT on the profit that they have made on that. So thank you, Lucy.
All right. Thank you very much, Thomas, for that. So the next set of questions, one, if a landlord has appointed a property management or a property manager to collect rent on their behalf, who is liable to submit the RIT? Okay, you'll explain what RIT is. Then the next question is, when is sales tax paid? Okay, and then the other question is, kindly clarify on remitting of withholding tax. I believe that KRA still expects that withholding tax is remitted within 5 working days after deduction. And since I'm hoping that's a short one, let me just pick another one. Oh, this is the last one. Super, thank you. Could you please explain the concepts of installment tax and corporation tax, along with their due dates and the due dates for excise duty and import taxes? Way in ya kuona Thomas Kando. Those are the last questions. Thank you.
Thank you, Lucy. We'll deal with them in the order in which they came. So the first one talks about RIT. I think the person who asked this question is referring to rental income tax. We call it, we basically refer to it as MRI, monthly rental income. That's what the Income Tax Act refers to it as, but we're talking of the same thing. Now, the obligation is on the landlord. The obligation is on the person who is the beneficiary of the rent. However, if you have an estate agent who you have appointed and they are collecting rent on your behalf, they may actually remit that rent to KRA on your behalf. However, it has to be done through the PIN of whoever is the property owner or the beneficiary of that rent. So if you're the landlord and it's being collected on your behalf, the agent may remit the tax on your behalf, but they must use your PIN or your business PIN to remit that tax. Sales tax, when is it paid? Now, sales tax is generally VAT. In the olden days, we called it sales tax, but we now have a value-added tax act that is basically running the regime of this tax. Now, this is collected. So any sales that happen within the month, you collect those, and you, at the close of the month, then you prepare a return of all the sales and all the purchases that had VAT in them. And this needs to be filed and tax paid and remitted on or before the 20th day of the following month. So you have a 20-day window after the month closes to be able to actually file that return. Next question was on remitting of withholding tax. Now, this one, we had a Finance Act that came into play and was then set aside by the courts. And this act actually, this finance bill had actually changed the regime from withholding tax being payable on the 20th day of the following month to the 5th day after the payment has happened to your service provider. Now, KRA has actually not officially communicated on this, but we've been able to see from individual notices and demands they have actually sent to taxpayers and audits that we are currently working through. They are now actually requiring it by the 20th of the following month. So it is incumbent for every taxpayer then, first of all, just get advice from whoever is advising you from a tax perspective. But then also when you now go to file this, you'll be able to see that you're able to file it by the 20th day of the following month. We are yet to see a public circular where we have information and correspondence that we have, which is on private basis because it relates to specific taxpayers. But we need to see a notice in the newspapers then confirming this. But I think this whole confirmation will come when we have the stay orders on that act actually confirmed or not confirmed that is there. And then let me talk about corporation tax, the installment taxes. So installment tax is a word that is used, but technically it relates to how corporation tax is paid. So all businesses are required to pay tax on the profit they make on an annual basis. So that tax, we loosely call it income tax, but technically the name is corporation tax, and that's the business, that's the income of a business, the tax on the income of a business. So the law requires that if you generate, and this is not just as a business, as a company or as a business organization, but even as an individual, if you're running business as an individual, if you have income that exceeds 40,000 shillings in a year, then you fall under the installment tax regime, and you need to calculate based on your income how much tax is due after every 3 months. And this tax is payable, the first installment is payable by the 20th day of, by the end of the 4th month of the end of the year. For instance, if the year ends in December, so by 30th of April, you need to pay the first installment for the first quarter of the year. And then subsequently on the end of the 6th month, end of the 9th month, and end of the 12th month at 25%. So you need to establish these two formulas of calculating that that are provided by the Income Tax Act. One is where you take your business performance or your business accounts for the previous year that had been completed, audited, and filed. And you take that profit that you made in that year, add 10% to it, and on a quarterly basis, pay a quarter of that. So that's the first formula that the Income Tax Act provides. The second formula is that you actually use then your actual books. So you use your actual accounts for the quarter, you establish what is the tax payable, and then you file it on those anniversaries. End of the 4th month, end of the 6th month, end of the 9th month, end of the 12th month. So that when the year closes and you do your audit and you're filing your return, all you're establishing is whether there was any balance of tax. And that is what should be paid by the 20th day of April or that 20th day of the 4th month after your year end, the balance of tax. So that's how installment tax works.
Truly, truly appreciated, Thomas, that you honestly have gone through the detail of giving us a personalized legal tax advice. I will not ask how much to charge you. I mean, you could charge us when we do that, because that is quite a lot. And we truly want to say thank you very much. That said, ladies and gentlemen, you see, we cannot be able to finish all these questions because, as we said, that there is a lot that goes on in understanding your own business complexities to be able to advise specifically where are you, how do you say, exposed financially when it comes to tax. So may I ask that you actually take their, what is it called, their email address. Thomas and your team, kindly post your email address in the chat so that the participants can ask you questions and where it is that there will be need for now the legal advice, the tax advice that comes to being able to support the businesses, that is where the billing does come into place. Thank you very much for being a lovely, engaging audience. We truly, truly appreciate. I am with Peter, says, good job, Thomas, you have done well. I have a feeling that person knows why. All right, and there is the email address, thomas.warira@probityconsult.com. Thomas, do expect, we are about 122, and we were at some point 133 emails. I hope you are ready for that. To close us off, I invite Jackie from Ecobank to send us out. Karibu, Jackie.
Wow, that was awesome. I mean, very detailed. This is the kind of information that SMEs need to get before they even start the business. And I'm sure now you have the contact in case you need these services, you need advice, you know where to reach out. I would like to thank all of you for joining the webinar and staying to the end. We are still 120 of us, or actually 121 of us. Thank you, thank you, thank you. Have a great afternoon. If you need any of our services from an Ecobank perspective, if you want to join the Elevate program for training, capacity building, and improving your business, plus coaching and mentorship, feel free to write to us. I'll put the email address there, elevate@ecobank.com. I've also put down my email address, jbitutu@ecobank.com. Drop us an email and we'll schedule a one-on-one conversation. Also, don't forget to let us know the topics you'd like us to cover into the future. Asanteni sana. Have a lovely afternoon.
All right, and before you leave, would like to hear from you. Would like your feedback. There's a feedback form that has been posted. Can it kindly be reposted again? Because of a lot of discussions on the chat, kindly repost the feedback form. Kindly do not leave before you have given us feedback. That is how we are able to know that this is an important topic for you based on the feedback. There you go. Kindly do give us your feedback. There is the feedback link from Wild International. Please click on it and give us your feedback. Okay. And yes, we shall share with you the recording, go over it over and over again. Make sure you are not ignorant of the exposure of taxes in your business. Feel free to engage us on our socials, all the partners here, Probity Consult, Ecobank, Wild International. And remember, as a business person, do not work alone. We are here, we will support you. Out of the feedback that you give us, we are now able to know what more topics can we bring, which other partners can we bring on board. And of course, you will be receiving communication about any other webinars that we are holding. It's in our business that we do put the businesses in Africa on the global map. We shall resend again the feedback form. Please do so. For those who have not responded to us, we would like to hear from you. We would like to know what we can work on, what more support to you as a business person we can give. I know there's some good music to be played in the background as we are receiving feedback from you. I will say it is over and out from me, your moderator, Jerry Lucy from Wild International, Asanteni Sana, and as I like to say, let's go and make money. Money answereth all things, if you know where that come from. Thank you. Do have a good afternoon.
Across Africa, a new era has begun, shifting our focus to a new horizon, connecting us with the one purpose: to create and share opportunities to grow. Today, we are making a brighter tomorrow, built by our dreams and our energy. Across our continent, across the world, we are creating a better way to a better future. A Pan-African future, together. Ecobank, a better way, a better Africa. Across Africa,